Okay, welcome everybody to the July 2025 housing market update. I'm going to jump right into a lot of stats and we're going to end up with a fun, interesting bit of information about this thing called Superwood. Yes, hang tight, you'll hear all about it. Bear with me. All right, so let's take a look at local statistics. We're taking a look here at the number of new listings, which is a very important metric. Why? Because part of the problem with the overall housing market in the United States of America is the fact that there's not enough inventory. There's more buyers than there is sellers. However, that is changing. Take a look at the red line. You can see that it's slightly higher than the light gray line, right? That's 25 versus 24. It's improving slightly, but it's improving. All right, so that's a good thing. Then we take a look at number of units sold here, and what you can see is that we're not improving on units sold, at least in our local area. Now, if you recall from previous housing market updates, 2024 was, in terms of the number of homes sold in the United States of America, 2024 was the worst year since 1994, the lowest amount of transactions since 1994. Now, you can see by this chart, the red is below that light gray line, that light blue gray line. So that means 2025 has been even lower in terms of the number of transactions than 2024 was. So if you're a realtor, a mortgage lender, a home inspector, a real estate attorney, a title closer, or part of a title company, if you're a professional that's tied to the real estate transaction, you're probably struggling at least a little bit, or at least your year this year probably wasn't what it was last year, and certainly wasn't what it was 2 or 3 years ago. If you're having a banner year, good for you. But if you're not, just know that it's a market thing, right? Keep working, stay in it, don't give up. It's a great business to be in. Now, if you're a buyer, know that the number of transactions slowing down is ultimately going to put pressure on whatever listings are out there, and it may cause a reduction in price. We haven't seen it yet, but it may be coming, and I have some evidence that I'm going to show you in just a little bit. Average price continues to go up. Okay, now this is the average, and really what's just remarkable here, this chart goes back all the way to 2019. It's essentially doubled in the last 6 years. Price has multiplied by 2 times in the last 5 years. So it's really been a remarkable ascension of average price. Will it come down? Maybe. We're going to see. I have some evidence. We're going to take a look at it. Days on market. How long is it taking for homes to sell? It's still very strong. You can see the red mixed in with all these years down below. Not much change there. Sold to ask ratio. This one, there is a change here. You can see, again, that light gray-blue line was higher pretty much every month than it was of last year than it was every month of this year. So that just means that homes are not selling at such an intense pace over asking price, right? It means that bidding wars are slowing down a little bit. Maybe the bids don't have to be so far over ask. Maybe buyers are even able to negotiate price off of the asking price, which is happening. And I'm also seeing, as I work my way through comps and whatnot, I'm seeing a lot of price reductions out there, right? You can even just see it on social media, new price, right? There's a lot of new price posts going on out there, and that's just telltale of the market changing. Okay. All right. Now, something I haven't done in a while on one of the housing market updates that I'm going to do right now is we're going to zip through some other more macro data points that are important to note. All right. So here is a look at the 10-year Treasury bond note yield. Okay. Now, just know that a lot of people ask me, hey, Jeff, what do you think about Chairman Powell, who's the head of the Fed, holding out on lowering the interest rates, so on and so forth? And my answer is, well, just because the Fed lowers rates doesn't necessarily mean that mortgage rates are going to be lowered. Okay, you have to understand that mortgage rates are tied to the bond market. Okay, so if you really want to know what's happening with mortgage rates, look at the 10-year Treasury bond chart. Okay, that we have up here. So you can see that going back to 22, it started climbing up through, 22, and then it just kind of spiked, came way up. And it's not really changing all that much. However, there is, again, some evidence that, rates are settling in. We're going to talk a little bit more about that in a minute. All right, so here's a look at the 30-year fixed, all right? For over 30 years of time, the 30-year fixed is charted here. And as you can see, even where we are today, historically, it's a good rate. It's a good rate. It just so happens that there hasn't been a lot of time between where we are right now at 6.67 and where it was at the bottom at 2.75, basically. Okay, there's not that much time. That's the whole issue. There's this huge variance between the 2.75 30-year fix that was there in the early 2020s, and now it shot up in a short amount of time, and it just caused a log jam, essentially, right? All right, now, another data point that is just interesting to look at is the Dow, right? Or just the stock market in general, because it does have impact on things that are going on in the housing market. You can see that, the stock market has been up and down as, on a, monthly, quarterly basis, but on a long-term trajectory, it's been up and to the right. There's no question about it. And it's continues to remain at all-time highs. And it's strong. Now, a strong stock market doesn't necessarily bode well for the bond market, right? It may make bonds less attractive as an investment. Therefore, bond rates need to be higher to attract those investment dollars, which means that mortgage rates go up. Okay, so, and that's coming back to, the discussion about Chairman Powell and his team lowering rates. If they lower rates, that usually benefits the stock market, which means that the bond market has to be even more attractive with higher rates. So it could almost mean if they lower rates, it might actually increase mortgage rates. So that's that. Another data point that I always find fascinating, because to me it's a long-term look into what's going on. This is a chart of population in the United States of America. All right. So the wider the bar, the more people. Females on the right, males on the left. So what you can see here is that the bars are widest, basically from 25 to 60 years of age. Okay. But it's just so fascinating to see what's going on below 25 years of age. It is a much, much smaller population. So as those people near, the age of purchasing homes, they're moving on in their careers and whatnot, there's going to be a lot less people looking for homes. And if these trends continue, lower population, that could really mean a problem for the housing market, because right now there's a lot of attention on increasing housing units and providing more residences just basically all across the country. But what's going to happen in 10 or 15, 20 years if our population really truly is much lower? That could be interesting, something to keep an eye on. And then the most important thing is affordability. All right, that's what you're seeing here on this chart. This is really tells the story, right? When you just kind of look at this, you can see back in, the last boom that we had, 2005, 2006, the market was really at a peak. It was really high. Affordability was really low. And then, the whole financial collapse happened by way of mortgage-backed securities, and boom, everything just fell down. And affordability just came it came back, right? And the reason why it did is because a lot of people were losing their homes to foreclosures and short sales, and there weren't a lot of eligible buyers, to buy homes. There was far more inventory than there were eligible buyers, right? So affordability snapped right back. But then, as time rolled on, mortgageability came back into play for a lot of people as they got out of their homes. They did their seasoning after they got through that short sale or foreclosure, and they became eligible again. And it's been a very robust financing environment. So now you have all these people looking to buy homes again. And there weren't many units built by builders during the downtime. So we have an inventory problem. And now affordability is through the roof because interest rates are way up. And so are prices, as you saw. Interest rates have more than tripled, really. It's been a 3x situation for interest rates. And you saw the pricing on the homes, it's been a 2x increase. So those two things together have made it a really historically bad affordability situation for housing in the United States of America. Okay, so a few more things worth showing. Just in the last week, right, mortgage refinance demand surged as interest rates dropped a little bit further, right? So this is good, right? Because mortgage lenders can make some money again, right? They really were hit hard during this last 3 to 4 years when rates increased significantly because the refi business completely went away. But a lot of people have bought at higher rates and they're keeping their eye on interest rates. And their plan was, well, the interest rates are really high, but I'll refi as time goes on. So now they're gaining confidence that, it's low enough where they want to pull the trigger on it. So that's a good thing. Applications to refinance a home rose 7% in 1 week. And for new purchases, it rose 0.1%, which is basically nothing, but it didn't go down. It stayed steady at least. Okay, this is another important point regarding office space. I did a little bit of a session on zombie buildings that were taking place in the United States of America, and I kind of related that to the housing market and how it could affect things in terms of like a contagion with financing and this, that, the other thing. So I picked up on this in the journal, a new article that was released last month, and it looks like the office supply issue is taking care of itself because developers and municipalities are working together to convert office buildings, and in many cases, they're knocking them down. Even in the little markets like Warwick, New York, there have been some office buildings that have been converted to residential, which are great moves for the property owners, right? Because now they have better potential for income. There's more housing units for people. Office buildings tend to have been built in, walkable areas where people actually would like to live. But they were consumed by offices. And now with everything changing in terms of people working remote, so on and so forth, there's just not as big of a demand for office space. So that's helping solve some of the problem. However, a lot of these office buildings, I've spoken over the last couple of years with some engineers and architects about the, probability of some of these huge buildings in New York City in particular converting over to residential. And in many cases, it's just not feasible physically the way that the plumbing runs through. So there's a lot of things still that need to be solved. But office conversions are increasing due to falling prices and government incentives. But this is the key here. Office supply is on pace to contract this year for the first time in 25 years. So that's a good thing. That means that they're reducing the supply, which gives those buildings that are left the ability to get leased up. So that's a good thing all the way across the board because it helps the loans stay current, so on and so forth. Banks making money is a good thing for us and everybody in this world because it helps loans be available to people who want to buy homes. Okay. This is interesting, all right? And maybe this is a bellwether for a signal of what's to come. The worst housing market in America is now Florida's Cape Coral, okay? So what it says here, Cape Coral's housing market, once booming due to pandemic-era migration, is now the worst in the United States. Elevated home prices, rising insurance premiums, natural disasters, and waning investor demand are hurting Cape Coral. Homeowners are underwater, foreclosures are rising, and builders are abandoning projects as the city faces a housing slump. Newsweek, so all of these points were from a journal article, but Newsweek picked up on it too, and there's other publications out there too. They're stating that Cape Coral was ground zero of the 2008 crisis and is sparking alarm again. So it's just interesting, right, that the same locale that was at the epicenter of the last downturn is now experiencing serious issues with foreclosures, short sales, so on and so forth. So is it a sign to come of what may come? We don't know. We shall see. Now, I want to leave you off with this fun but very interesting little tidbit to help you kind of see what's coming down the pipe. I saw this article on Superwood, and I'm like totally enamored by this. I think it's the coolest thing. It's a great invention, and it really could be something very important for the future. It's made chemically by treating and compressing wood to remove lignin and densify cellulose fibers, enhancing strength and durability. This stuff is actually just as strong or stronger than steel, which is amazing, and it's light. It's lightweight and it's a lot less expensive to produce than steel. So it's made from low-cost, underused woods like pine or poplar, cutting raw material costs compared to steel or concrete, and it can actually be used from scrap wood and leftovers. I mean, if you're ever been around a construction site of a home being built, there's a lot of scrap that comes from building a house. All of that can be repurposed and used for superwood. Faster construction, the lighter weight makes it easier to handle, right? Think about guys throwing studs up in a house, right? You can do it faster if it's lighter. It's easier to transport. It reduces transportation costs because it's lighter weight, right? So it requires less fuel and fewer resources to move the materials. It's suitable for modular builds with offsite prefab, speeding up construction and reducing expenses. There's broader applications for superwood too, which is kind of cool. It could replace plastic, aluminum, carbon fiber in vehicles, and even electronic gadgets. Isn't that amazing to think that superwood could be part of your mobile devices at some point in time? That would be amazing. It's not yet, there, as I dug into it a little bit deeper, there are a lot of approvals that need to be gained to be able to use this product for structural replacement of I-beams and such in steel buildings and whatnot. However, it looks like the fastest thing that they're going to put it into is siding for homes, decking, railings, that sort of thing, where it can just come online right away. They don't need much, federal or state approval to bang those materials out. So it is coming pretty quick. There's a company down in Frederick, Maryland that created this and is scaling a manufacturing plant pretty quick. So just something to keep your eye on and something that's interesting. And we always like to do that. The Housing Market Update just provide you with something interesting.